Good day to everyone. We are live for this Elliott Wave live session. It's Monday, January 12th, 3 p.m. Central European Time. So let me know if we are fine. I hope my computer will be okay today because it freezed a few times before, so let me just check something. Hey, Tim is here, Anas is here. Let me just exit some applications here. Okay, so hopefully now everything will be fine. So apparently you can see my screen, hear my voice. So let's dig in. Before we go to the charts, let me just remind you that today is the final day. So final few hours for this 2026 deal. So you can save 40% on the FX or crypto membership if you take a yearly plan, or also you can apply for the 14-day trial first with the monthly plans as well. So if you are interested, if you love the way I'm looking at the markets, the way I'm providing you updates, make sure to check this out because this offer will be removed soon. Now, what's going on? As you know, we have some Trump that put criminal investigation on Fed Chair Powell, so that's definitely something that could be very risky, at least for the beginning of the week for the markets, because if there is lost trust in their system, then we know that even markets could see a retracement to the downside. And what's very important is that whenever that's the case, and you see in this kind of a environment that stocks are moving to the downside, but because we know what Powell means for the economy, the markets, and the policy decisions, of course, it's very important to understand that even dollar will move to the downside at the same time, right? So don't be surprised if you see this this positive correlation for now, at least for this week. Also, then maybe these correlations can again go back to normal, because tomorrow we have then inflation data, earnings season begins, and also what's the important is that US-Iran geopolitical issues, there are some speculations that maybe there's even chance that US could take some military actions in Iran because of protests there. So that's definitely are the main stories for this week. But overall, whenever there are some kind of as I said, issues there in the US, I just think that there's still dollar that could possibly come to the downside. As you know, we also got on Friday non-farm payrolls report, showed the weak job gains, but it's still somehow softening labor market. So each month are less and less jobs created. So that's also something that can keep dollar in this downtrend. And we have been looking at this dollar weakness for some time now, actually since mid of November, when we highlighted this very important resistance up there around 100.40. So what's the most important right now is that you have these 5 waves down, right, followed by this 3-wave rise. So you have very nice, beautiful textbook Elliott Wave pattern, okay? And usually whenever this 3-wave movement will unfold, it may stop at the 61.8%, right? And this 3-wave rise can unfold within this parallel called corrective channel. And we stopped out very nicely this upper resistance line. So far we are coming nicely to the downside, but keep in mind it's Monday, and you know how I feel about Mondays, especially if on Mondays you see some sharp flows, then at least some portion of these flows can be retraced by Tuesday's price action, or maybe already even see some reversals when the US session is back to normal, which is now. So don't be surprised if we'll see some rallies, could be some short covering, just temporary rallies or after this recent decline, but I just think that overall picture suggests that we could continue lower, maybe even to retest these levels pretty soon at 97.70, especially once we will have this broken channel support here around 98.50. But as I said, what is very important is that we have this correlation, which for now you can see it's positive, right? So you have dollar index here. I believe dollar index is in blue, and here in orange you have the S&P 500. So you can clearly see the positive correlation that I'm talking about. But of course it would be much easier maybe for the dollar with issues to come to the downside if stocks will just stabilize after the current weakness. So no matter how I look at it, I just think that there is real threat for dollar to continue to the downside, even if someone would expect that stocks would will sell off and you will see some safe haven flows. But because of what's going on between Trump and the Fed, well, I think that this is something that could keep dollar also in downtrend no matter what's happening on stocks, right? And the wave pattern, as I said, is also very clear, very directional here, and I just think that as long as we are trading below 100.40, that there could be more weakness. Because of this threat to independency, I just don't see how investors would find some trust into their system and buy or look for some investments on the dollar. So rather than picking dollar, maybe even in case of risk-off flows, they will rather maybe look at some other currencies there, maybe like Swiss franc. And also now if we take a look on the S&P 500, or maybe just look at these daily pictures here of some major indexes, you can see that we are already here on the S&P 500 trading at the new highs around 7k. So keep in mind that we could be in the last leg of this move up from April of 2025 lows. You know what happens down here, and as I said, last time we compared this price action with this one from December, January from 2024 to beginning of 2025, when we also have seen a massive reversal to the downside. So if something like this happens, we know that this will spread across all the markets and will impact everything, but it doesn't mean that this will happen right now, right here. You just have to understand where we are currently positioned, what may happen still this year. Also, it's not bad idea to look at Russell, right? Notice that Russell has seen a very nice and sharp move to the upside, and if there would be even more gains on this one, while the S&P 500 or the Nasdaq 100 will continue consolidate, it means that there could be some rotation happening, and this could be some very important signal that maybe stocks could really be in late stages of their recovers. But when looking at the Nasdaq 100 technology sector, it looks like it's in a pause. So ideally what could happen is that the major reversal or top could show up when the Nasdaq 100 would also move to new highs. But when I'm looking at AMD and some other stocks, even Nvidia, I just think that there is a chance that we could basically stay in this correction for a bit longer, maybe even retest lower prices rather than just break straight to the upside from here. Now, when it comes to the S&P 500, maybe the short-term look, also what is the real threat here is that notice that we have plenty of overlaps, right? And these overlaps, I mean, it should be a concern. because this kind of overlaps with new prices at new all-time highs just brings the question if maybe this momentum is decreasing and signals that bulls are really running out of control slowly. Okay, but of course we don't have any kind of a real breakdown point that would put a top in place, but just we have to consider the personality at least of this trend, of this lag from the mid of December, which you can see it's much slower now compared to this very strong move up from that November lows. It was much easier for me to be bullish down here, and if you were with us on each Monday, we highlighted this as a very key important support down here, and since market is now at new all-time highs, then we have to be very careful. Also keep an eye on VIX. Looks like that VIX is gapping up from that support area. It doesn't mean that that's anything important, but just brings on the question if maybe really we have some fear going on. But it's keep in mind that it's just fresh news, start of the year, no real flows yet, and this could easily be reversed. But when it comes to cycles, I still think that we are coming into these very late stages. Now when it comes to euro dollar, as you know, last week we said that euro dollar is ready to make some more pullback, deeper pullback, because of this broken trend line support. So we were looking for a wave E pullback within this triangle that I have been tracking since the beginning of November actually, and so far looks like that we are in a wave C. Not really sure if we are going to complete this wave C already at the beginning of the week. Keep in mind that again it's Monday, and I'm very careful with Monday flows, because whenever there's sharp moves, market will not just continue straight to the upside with just one leg, okay, for the whole week. There will be some ups and downs, and maybe there will be some more choppy price action. Maybe even if we retest 116, still fine for this wave E to turn out to be more complex. But overall, it just suggests that sooner or later we really will fly into very strong support here, and then turn to the upside. So euro dollar could be in very late stages of this triangle, and I think that in the next maybe few weeks, few months, we could see starting euro dollar pushing closer to this previous 2025 highs. Also on the downside, what really matters the most is obviously this trend line. If wave E really gets a bit more complex, and then if suddenly break at any given point this 114.60, then we know that something else is going on, and that euro dollar is definitely not going to see this fifth wave. Now cable is also making some very nice, beautiful price action, as I have been talking about last week. We are seeing market moving to some resistance here from September and October swing highs. We recently broke out of this upward channel, so looks like that even this one could be here headed for some corrective movement, unless that was a wave 4 flat formation. That's also something to consider. But when it comes to potential trade ideas here, I just think that this zone here, the yellow box, let's call it trade reversal box, could be much more attractive and interesting. Also keep in mind that I believe here we had we have Bank of England trade decision, so they cut rates, even inflation also softened them if I'm not mistaken, but still after this initial drop market turned higher. So this must be liquidation area, meaning that maybe if the market will really pull back into that zone, I would call this as a very sweet spot for the potential next rebound. While market is obviously trading here above 113, I just think that this trend is alive, the uptrend, and that any kind of a deeper retracement could be very interesting opportunities. Looking at dollar CAD, I think I covered dollar CAD, I didn't, last week. And dollar CAD said that we could be running into the wave 4 here, and really what bothers me here is that we have some very sharp moves. Yes, sometimes fourth waves can be also very sharp, but when it comes again to discovering potential trading opportunity, that's not kind of a price action where I would be interested to look for potential shorts. It would be a totally different story if we would have some more complex here and clearly visible in 3 waves rather than just one sharp leg. So but that doesn't mean that in the near term the price will not pull back. I still think that we are technically at very nice resistance at the 50% and here at the previous swing high, and more importantly this swing low at around 1.3890. So this area, in my opinion, still very important one. We could see a sell-off, but it's yet to be discovered if this sell-off will unfold only in 3 waves like this and then we see a new rebound, or maybe we will after all continue lower into in 5 waves. So if someone would force me to trade this one, what I would suggest or what I would love to see is a very sharp decline that would take just 1 or 2 days for prices to come back to this 137.60 area, and if on the smaller time frame I would be able to count this as an impulsive move, then after rallies there could be still some ideas for potential shorts here. Okay, but at least at this stage, as I said, it's not something that I would prefer to take action on, because after all, maybe that's, who knows what if that's not wave 4. Maybe the Kiwi for such example is much more clear. Firstly, as you know, what we have few important stuff here which really matters when it comes to the Elliott Waves principle. Now the first thing is that here on the very if we zoom this out a little bit, you can see that move up from April 2025 lows to these highs, this move has been retraced, and it has been for the 78.6%. And notice that down here, months back, we have been looking for this ending diagonal, and we have been calling for limited weakness. And ending diagonals, as you know, will usually cause a very sharp reversal in price in a very relatively short period of time, and that's exactly what happened. Market made a very sharp move here. More importantly, we have seen an overlap with this previous wave A. So this overlap suggests and invalidates any kind of a bearish impulsive interpretations, right? So it basically confirms the idea that we could really be making some major bottom here. And then you have also another very strong move here that unfolded from November lows, and now at the beginning of the year you have this some very nice free wave retracement, and we've been also looking for this free wave retracement. I thought that market will pose down, which usually do. Market will make the holiday reversal pattern, meaning that if before holidays you see some very sharp moves in one directions, when holidays are approaching there will be position portfolio adjustments, and this will impact the price, and that's why I see a reversal in the trend or pause within the hard degree trend. And that's exactly what's happening here on the other markets pairs as well, in my opinion. So now when we are already coming into the mid of January, maybe some new positions adjustments could have an impact on the markets, and maybe it would be much easier to find the real flows here, where I would assume that Kiwi could finally break to the upside out of this corrective channel here. So if we can see this week close above this trend line, then I think that the third leg to the upside is in the cards, and we could see a revisit of this December 24 swing highs. Invalidation level clearly is down here at 0.5581, because of course, as long as we are in this neutral stage here, we don't know how complex wave 2 can become. Okay, it's all just speculation that it has ended here, but if we see a weekly close here out of this channel, where this odds for potential straight to the continuation higher would likely increase. As I said earlier, maybe dollar Swiss franc is something to watch for if we really would see stocks moving more sideways or lower suddenly. Then Swiss franc could also be very attractive. And I'm still missing one more leg to the downside here. If we just hide the labels for a minute here, you can clearly see that was the previously very strong downtrend, and now we are just stuck in this range. So not easy to identify the right Elliott wave count here, but no matter how I try to label the wave counts, even some kind of a triangle or whatever, well, it's most likely I will came out with the same conclusion that sooner or later we should retest the lows, because any kind of a recovery from that low is not impulsive, right? So we should stick with the idea that most likely we are missing one leg to the downside here. So dollar Swiss, I think that it could see more weakness. It could be very interesting for potential retest of the lows. But again, when it comes to trading Swiss franc, just you will have to be very careful, very nimble, very small risk, because Swiss National Bank, they said, I think last week, that if needed, they will act, and they will obviously act if they will see even lower prices. If they are not acting here, then odds for potential actions from their side will increase if the market will be down here. So that's something that investors, speculators will watch for, and definitely that's something that could change this trend around. But as I said, maybe the best potential opportunities could then not show up on dollar Swiss franc, but rather euro Swiss. About I also discussed in our past webinars, where we have some very nice, beautiful rebound that occurred last week. Sorry, not last week, last year. Also, looking at crude oil, so we have seen on back of that news that US could, who knows, attack Iran or take some actions, not really attack. I don't know what are their plans, but any kind of rumors, of course, or uncertainty turns oil prices back to the upside. And what we are seeing right now is that after a retest of that 2025 lows, we are now recovering and trying even to break out of this corrective channel here. So my assumption is that here crude oil for this year could really starting to see some very choppy price action here. So I would not be surprised if we'll just keep chopping around here in this range for some time before eventually the real direction could be found, ideally to the downside, if we consider that the previous drop was pretty strong one here, down from 2022 or 2023 highs. Also, why maybe a crude oil should be very important this week, it could help us to identify the outcome for the US inflation data. Now in December, here you can see that most of December we have seen a pretty nice decline on crude oil prices, and tomorrow we will get inflation data from the US. The expected figures are on the yearly basis 2.7%, 0.3 on monthly basis, so no changes are expected. But if we consider that oil prices really move to the downside, it means that this maybe will have the impact on inflation. So what it basically means that we may not have any kind of big surprises to the upside, like 2.8, 2.9%. Likely it could come around the expected number 2.7, or maybe even we will see a move lower. And if that would be the case, let's say that number comes out around 2.6 or so, it means that dollar will likely see even more weakness, because then odds for potential more cuts could even increase. Higher inflation will turn this picture upside down, right? In such case, it means the dollar could actually see some solid rebound. Now let's take a look on gold. So geopolitical tensions, political uncertainty in the US, everything, and the risk of flows, everything together is you know, very bullish for metals, and we have seen some very nice break to the upside in the last few sessions. And I think that that's not the first time when we have seen these moves happening on Monday, from the weekly open price extending the price action into the Monday session. So it happened a few times before, and that's because we always get some very unexpected news during weekends, and then markets obviously will respond when it opened. And here we can see that now my previous wave count obviously was invalidated. I have been looking for and expecting that maybe because of that sharp decline that wave 4 will be deeper. Again, it was a very sharp decline, very similar basically to this wave 2, and now we are in a wave 5. So looks like that we could retest the upper side of this parallel Elliott Wave channel. So looking maybe for some intraday support for the beginning of the week. What should be important is 4,550. If we don't stop here, watch out for 4,497, because if that price would be overlapped, that means that all of the gains that you are seeing from the beginning of this week would completely be reversed, and this then could put some serious correction or sideways price action then in play. So definitely watch for this 4,500 is a very important level. But if you're looking for some intraday moves here, quick in and out, then maybe 4,550 is something that you want to pay attention on. Looking at silver, this one is also trading at new highs. It broke out of the previous consolidation. So when we have seen this blow off top and then consolidation through holidays, it was a very beautiful reaction actually. And now when normal flows are back, it looks like that markets, investors, traders don't have anywhere else to hide than just trust in metals. So we are seeing this one now trading even higher. Maybe there could be even room for $90 till we complete this 5-wave rise within this wave 5, and then maybe in a few weeks try to complete this impulsive sequence up from October lows. DAX, German indexes, as you know, German index is in much better shape compared to the US. We are seeing very nice and beautiful uptrend. As you know, we have been looking for key supports down here weeks back. We are now breaking this trend line pretty aggressively, now even extending within this third leg, which seems like it's much sharper compared to the first leg. So whenever you are trading at new highs, even if you think that we are in late stages, well, you can go and scale to a smaller time frame, and as you know, we should have there 5 waves up, right? And if you look closely here, that's not really the case yet. So this market could really stay strong. We are just breaking this base channel resistance here, which could just be an indication that we are really in a wave 3. And whenever wave 4 pulls back, it could find a support. If we see even more upside here within a wave 3, the first support to watch could be maybe then, if we see really some sharp moves from here, the first support for wave 4 will usually be around this upper trend line of this base channel, and then the mid trend line. Okay, the lowest support could be the lowest trend line of this base channel. So what this technique suggests is that as long as we are trading above this trend line support, the lowest one of the base channel, let me do it like this, it means that this trend is bullish. So any kind of a pullback, which could maybe in the next few weeks unfold some similar price action compared to this wave 4, well, that's when new opportunities could show up. When this will show up, we don't know yet, right? But it just tells us the whole picture in structure that this trend is ongoing and not finished yet. And as long as we are trading above this 24,500, this market is bullish. Now let's take a look on cryptocurrencies. Now, firstly, looking at Bitcoin long-term holders, I covered this in our end of the year video outlook. So despite a lot of losses that are happening, we are still not seeing long-term holders at extreme losses, meaning that they are not starting to sell their longer-term holdings yet. But whenever this would happen, it would most likely happen in extreme pessimism. So maybe there's still room for some more weakness, and the reason is also coming from the Bitcoin itself. you can clearly see that last week what happened is that market is made at the start of the first week of new year. We have seen some very sharp move to the upside, and as I said, usually at the start of a new week, which is Monday, it's same thing as start of the new year, which is first week or first month of the year. If you see some sharp moves, because these are not normal flows, these moves can be reversed. Okay, so that's why I'm not really surprised that after market did some stop hunt up here, that we are now turning again back to the downside. So I still think that we are missing another leg to the downside here, and ideally it could be fifth wave that will take us maybe even back to this April 2025 lows. We know what Trump tariffs did back then down here. So I think that this is a very, very important level and could be key support for this year, but it's time sensitive. I'm not really sure when we could move into that area, but that's definitely something to watch for. When it comes to liquidations heat map, this one is pretty important one. Notice that I'm looking here at leverage positions, and notice what happened here. And notice that yellow boxes represents significant liquidation pools, right? So it means that here are very big important stop losses. So it means that if the market is having these orders at the downside much higher compared to the upside prices here, then of course it suggests or indicates that this could be the next potential level to watch. So could be as a magnet zone, and then we could see some reversal or stabilization. So because we have a lot of orders down here, it looks like the market could move to the downside rather than continue higher here. Because if these are stop losses from traders that are long, well, market will just not award everyone that easily and continue straight to the upside. There will be liquidations before the market may stabilize. That's for leverage positions. And also if we take a look at spot as well, let me just change this to 3-month period. Even this one, which does not show such a significant levels, because as you know, on the short-term basis, leverage positions will have much more bigger and important levels not far away from the market. But even this one shows that there are not important orders here at the top above the market price, but rather here at the lower range of this, not lower range, yes, lower range from the, let's say, from the mid of December or so. So even this one indicates that we could retest these levels here. And now, as I said, Bitcoin itself also, it really has only 3 waves to the upside here. So making this wave count like this would completely invalidate and broker my Elliott Wave rules here. Ethereum, this one also, it's really moving sideways here. Some would say that maybe wave C has ended here, but then you certainly want to see some key levels to be broken to the upside. But now because the price is in the range, I'm just wondering if that's some kind of a fourth wave on unfolding bearish triangle, and we will see maybe even spike into the 78.6% retracement around 2000 level. So this could be the next support level if we really are going to see. Maybe if we connect this trend line here, if we start breaking down here, then I certainly will turn bearish here and label this as a wave 4 rather than some kind of a bullish idea here. But we have few wave counts on our other screen for members, so of course we will definitely keep a very close eye on the intraday developments to maybe confirm one and invalidate the other wave count. So by the way, if you are interested in our services, make sure to check for our offers here. The 2026 discount will expire later today. Also, Litecoin itself, I came out with an idea that we are in a bearish triangle at the beginning of this January, and looks like that today's price action is just another confirmation why we should we will stuck with a higher degree range, and why we could see even a retest of the 78.6% around 68 or $66. But of course there could be some rallies in the near term, because this triangle is maybe still not finished. So if we see some rally in the mid of this week, maybe some important resistance to watch could be around $80. Also looking at Ripple, as you know, last week we have seen a pretty sharp recovery, but now this week we are seeing a reversal of these prices. Let me check what's happening here. And if you look here at this weekly candle, well, that's definitely something that brings on a lot of concern and uncertainty. So we can just easily stay sideways here, or maybe even retest slightly lower prices. But that's just more for the short term. When it comes to the wave count, I still think that we are here in a corrective wave 4, and that lower we go, much better, stronger could be a support anywhere between 1.5 to 1.8 dollars. One last thing when it comes to coins is Solana. As you know, I've been looking this and tracking this one already last last webinars, and I still think that there is ongoing wave 4. We have seen the first support tested here around 130. As I said, this could be a key support if wave 4 would be rather sideways rather than deep. But when it comes to labeling the Elliott Wave counts, the most important is that you focus on basics and just try to stick with a simple wave structure. Okay, not trying to force the wave count and look for something that is not visible there yet. So for me, labeling this as a triangle is just idea somewhere in the back of my mind, but definitely it would be too soon to label this as a triangle, because notice that we have a very strong decline with the price now trading at this lower level. So it could just easily be an ongoing wave C of an ABC zigzag here rather than a triangle. Not to mention that this lag here was also pretty sharp one, and not really that corrective much. So I think that maybe much more important support could still come around $80. However, I own some Solana, but I'm ready, of course, to add a lot more if we are going to see more liquidations happening into that key support levels down here. So that's a very big level in my opinion. But if we jump, let's say suddenly in the next month, 2 months, and we see price coming back towards 200 level, then a triangle would be much more appropriate. Okay, so definitely both wave counts interpretations are here. Also, earlier I talked about Bitcoin. By the way, we also updated a lot of stocks, single stocks as well, and a lot of them are showing some interesting price action. Some of them are showing the price action which shows that we could be running into some serious resistance levels. So if you're interested in US single stocks, make sure to check this out. It's still free, but this beta version will close soon. So if you want to take a look inside, make sure to register and apply for the access. So we also, in that service, we also cover Coinbase as well as MicroStrategy, and Coinbase could also be in making a free wave drop here. But notice that we have some very important unfilled gap from that earnings that were released back in May of 2025. So basically these open gaps, as you know, firstly cause a very sharp moves, especially if we have some cryptocurrencies in a bull run. But then whenever the market stops and turns, it could come back to this unfilled gap. So first unfilled gap occurred here. That was back in October 2025. You notice that this gap acted as a very nice resistance here, and now it looks like that we are trying to attack this lower that gap from that May. So looks like that this is pretty interesting area to observe. But what I'm trying to say here is that seems like that there is still room for some more short-term weakness. That's still around 10 to 15% here, right? So maybe that's something to watch for, especially if Bitcoin would also be trading at the lows. By then all both of them could signal that market could potentially come to late stages of these current declines. Also, MicroStrategy, who is keep buying Bitcoins each day, each week, looks like that this one is also still in a fifth wave here. Now the key support always comes at the extremes or terminations of the previous fourth waves. What is the real concern here maybe is that we broken here below this trendline channel support, so clearly this identifies the downtrend. And if we also compare this wave 5 to wave 1, you can see that there is also room for slight more weakness here before we can stabilize. But what's good news is that after 5 waves there could be some rebound, but we don't know what kind of a rebound will follow, but at least some stabilization should occur to make a 3-wave recovery. Okay, so that's a pretty big support down here, and this could be maybe perfect timing also with Bitcoin around 70k. Traders, I hope that you enjoyed this presentation. Please don't forget to subscribe to our channel, press a like, and hope to see you in our members area, or if not, hopefully you will be again with us next Monday, same time. Bye.